Also, positive news, we do have Coinbase coming out with the fact that they are also no longer going to be pursued by the SEC, so huge win for them. Let's take a listen to what Brian Armstrong has to say.
Brian here from Coinbase. Well, today's a really good day because we just heard from the SEC staff that they're planning to withdraw their litigation against Coinbase. Now, this still needs to be approved by the SEC commissioners, but we're hoping that happens next week. And if this goes through, it's a really big deal, not just for us, but for the whole crypto industry, the 50 million Americans who hold crypto, and I think for the rest of the world, because this is an important signal about where things are going. Now, ultimately, we still need to get legislation for crypto passed in America to codify some of these rules and make sure the industry can get built onshore. But if this goes through, it's still a very important legal precedent that rights a wrong that was taking place over the last few years, where the SEC unlawfully, in my view, decided to attack or even try to kill the entire crypto industry by suing lots of different companies, including us, claiming that many of these crypto assets were securities. Now, they did this despite there not being any law indicating that that was the case. They didn't publish any clear rules to the industry. And in our situation, they actually had allowed us to become a public company just a few years prior, where they looked at everything we were doing and our listing standards, and they got comfortable enough to allow us to become a public company. So we should not forget how close we came here to few bad actors in the government actually going off and trying to kill this industry. I remember in 2023, a lot of people were advising me on this, and they were saying, do not engage in litigation with the SEC. It's going to cost you tens of millions of dollars. It's going to put downward pressure on your stock price. It's going to spook public market investors. And, number three, the SEC might fight dirty and pressure other companies not to work with you, which unfortunately did happen in a couple cases. But I think the thing that ultimately gave me the courage to do it was that, number one, I knew that we were right on the facts and on the law. Number two, if we didn't stand up to this bullying, it might have been the end of the crypto industry in America, because not as many other companies had deep pockets like we did. And ultimately, we had to spend about $50 million defending this case. And number three, we needed to stand up for our customers' rights. They weren't doing anything wrong, and they wanted to use this technology. This is America. I wasn't going to let some activist regulator come through and try to make up new laws that didn't exist and take away our customers' rights. So I'm really proud of where this case landed. I hope it creates a domino effect in other cases that the rest of the industry is experiencing. And we're never going to stop fighting for crypto and freedom. Thanks, y'all.
So as you heard right there, Coinbase paying over $50 million to help fight their case. Now, as you all know, Ripple has paid over $150 million in order to fight its case. But Eleanor, she came out and said today, Eleanor Tourette knew on Ripple, it is more procedurally complex than Coinbase because they already have an order from the Judge Torres at the district level to pay that $125 million penalty. So Ripple has already paid $150 million for sure in legal fees, if not more. Plus, they do have a settlement option of $125 million on the table. So this could nearly cost Ripple $300 million just to fight this case. Torres, according to the final judgment, will retain jurisdiction over the case for a year, so until October 7th of 2025, to make sure that the terms of the order are met. While the SEC could choose to drop the appeal at the Second Circuit, they would also need to figure out how to approach the district court and possibly come to an agreement on the penalty ruling, reduce or ask for a drop, and presumably get Torres's blessing as the presider. There's a degree of uncertainty in all this because, as one legal source tells me, we are in uncharted territory right now. And you guys know that because it's crypto and this has never really been litigated out like it has right now. But we're starting to get some really positive news coming forward. And of course, when all of this news broke, we got Jeremy Hogan, who's been covering the Ripple case since the start. The Coinbase case was dismissed with prejudice, meaning it cannot be refiled later, not even if a settlement agreement with some minor concessions. I guess the SEC is not waiting for Atkins to be confirmed before making big crypto moves. So they got the Coinbase thing happen very early this morning. Then we have the OpenSea happening later on in the afternoon. But we also have Brad Garlinghouse coming in and making a statement on this post by Jeremy Hogan saying, suffice it is to say, as I know that there are lots of impatient people, including me, the SEC has demonstrated a clear interest in moving on quickly, he gives an exclamation point there, from the failed regulation by enforcement policies, at least at the last administration. Now, saying quickly We know that the SEC case against Ripple has not been quick at all. It's been long and drawn out, significantly longer than Coinbase and also OpenSea. So we're hoping to get this resolved ASAP. And so about 6 a.m. this morning, a tweet came out, which we saw here, 401,000 Ethereum, which was worth $1.1 billion USD, was transferred from Bybit to unknown wallet. And so people were scrambling like, wow, this is a really interesting scenario. What could have possibly happened? Because Bybit is one of the largest crypto exchanges on the planet. You would imagine that they would have extremely secure situations. But then Ben Zhao comes out and tweets out the following just a few hours later. Bybit ETH multi-sig cold wallet just made a transfer to our warm wallet about 1 hour ago. They were planning on doing this, but it appears that a specific transaction was musked. All the signers saw that it was musked. The user interface, which showed the correct address and the URL, was from Safe. However, the signing message was to change the smart contract logic of our ETH cold wallet. This resulted in the hacker took control of the specific ETH cold wallet we signed and transferred all of the ETH in the cold wallet to an unidentified address. Please rest assured that all other cold wallets are secure, all withdrawals are normal, and this is when people started freaking out. A little bit of an idea of a bank run started happening on Bybit. As you can remember what happened with FTX when this type of news started to break, people started trying to withdraw all of their funds as soon as possible. Same thing with Luna. If you remember, Do Kwon came out and tweeted, funds are safe, we have all the money, etc. And we know that those two companies did not have the money. And when they had a run on those companies, they went to zero. Now, Bybit did and does have actually the reserves, which is very positive, but also they're taking loans from other exchanges to make sure that they have an abundance of money. So if you do have money on Bybit and you are scared, you can go withdraw that money, and they do have enough to hold every single piece of that. So while everyone was freaking out this morning trying to figure out what was going on, there was an Arkham bounty initiated, and Zach XBT went to work. He does what he does. He's a phenomenal sleuth when it comes to finding out what happened in these types of situations. And after the Bybit was hacked for $1.4 billion, X reacted and Zach XBT went to work. According to Blockade, an on-chain security platform, the $1.46 billion represents the largest hack in history. Given the size and scope of the incident, it was no surprise that the news traveled real quick throughout the community, eliciting reactions ranging from support from the crypto entities and calls to stop FUD, fear, uncertainty, and doubt, to security advisors for users and gallows humor. And in the wake of all of this today, crypto entities started posting in support of Bybit. Justin Sun came out and said, we've been monitoring the Bybit incident very closely and will do our best to assist our partners in tracking relevant funds, providing all support within our capabilities. Plenty of calls to stop the FUD started rolling out because everyone was getting very scared to go on a bank run and get all their money out of Bybit. Coinbase's executive Connor Grogan wrote, Bybit appears to be processing withdrawals just fine after their hack. They have $20 billion in assets on the platform. And it says a minute into the FTX bank run, it was clear that they had no funds to withdraw because they stopped the withdrawals. Bybit never even canceled a withdrawal during this process. And I know everyone has PTSD, but Bybit is not the FTX situation. If it was, it would be screaming it out. They will be fine. So what happened when this went into action with Zach XBT, he put together a bubble map on where everything was going. The hacker got sophisticated, splitting 10,000 ETH to 39 different addresses, then another 10,000 ETH to 9 more addresses. What makes this attack terrifying is that the hacker didn't break the code, they broke the humans. Each Bybit multi-sig signer saw a legitimate-looking user interface from Safe showing the correct transaction, but they were actually signing to change the smart contract logic to their Ethereum. The attacker somehow identified every single multi-sig signer, affected each signer's device with malware, made the user interface show a different transaction that was actually being signed, got all the signers to approve it without suspicion. Remember, there was 4 people that had to sign this. Cold wallet securities just got redefined. The good news is Bybit is solvent. Even if the hack loss is not recovered, a client assets are one-to-one back and we cover the losses. So they did come out and do an actual video, a live call on X today, explaining what happened, letting everyone know that it's totally going to be okay. The company Safe is now investigating as well. Safe security team is working closely with Bybit, We have not found evidence the official safe front end was compromised. The wildest part, withdrawals are still processing normally. Bybit claims only their ETH cold wallet was compromised, not their hot wallet. Warm wallet or all other cold wallets remain secure. Athena Labs quickly clarified as well, not a single dollar of spot backing value is held on any exchange, including Bybit. So what does this mean for crypto security? Well, multi-sigs aren't foolproof if human signers can be compromised. Cold wallets aren't automatically safe. Even if code is secure, humans remain the weakest link. Supply chain attacks are becoming more sophisticated. Some important security takeaways: use hardware wallets with screen verification, implement zero trust security, never sign transactions you don't fully understand, consider security through multiple layers of providers, recognize that malware can make legit user interfaces look different. The hacking group was officially identified as Lazarus Group, which is a North Korean hacker group, as being behind the $1.46 billion Bybit hack February 21st. Arkham did set a bounty to identify the person or organization behind the attack with a reward of 50,000 Arkham tokens worth roughly $31,000, and that has been paid to ZachXBT. So what an amazing Friday in the crypto world. We have all this positive news. Coinbase passing their SEC, getting rid of that. OpenSea getting rid of their SEC case. The craziest, wildest hack ever. But then we have some data that is showing that altcoin season is beginning. This time the season will likely be driven by stablecoin holders rather than rotation out of the Bitcoin. Altcoin trading volume is now approximately 2.7 times higher than Bitcoin's. He added that BTC dominance no longer defines alt season, trading volume does. Historically, alt season occurs when traders rotate profits out of Bitcoin and into other cryptocurrencies. This time, according to Ju, there is no direct BTC to alt rotation. And that has to do, I think, a lot with the fact that a potential Bitcoin strategic reserve, all these states, all these countries are buying Bitcoin. People that own Bitcoin are no longer even considering selling it. They really truly believe it's going to reach $1 million a coin. So it needs new volume. And I've been talking about that a lot. Like right now, we talk in the very beginning, we're at a $3.1 trillion total market cap. When the market cap goes up, that's when altcoins will go up. We need actual flow coming into the markets, new liquidity. Now, the CEO cautioned that this is going to be a very selective altcoin season where only a few coins are pumping due to the lack of fresh liquidity entering the crypto market. The shifting market dynamics are the stablecoin market caps increased sharply after Donald Trump's election. The total stablecoin market cap is roughly $232 billion as of February 21st. So that is actual dry powder that people could be buying crypto with. Citi, an investment bank, expects continued adoption of stablecoins to propel digital asset performance in 2025. U.S. Bitcoin ETFs broke $100 billion in Bitcoin holdings in November. Meanwhile, the public companies have collectively bought more than $60 billion worth of Bitcoin, largely as an inflation hedge, according to BitcoinTreasuries.net. Bitcoin has built its own paper base layered through ETFs, MicroStrategy funds, and more. In this paper-based L2 Bitcoin, bridging to other altcoins is impossible. As a result, only a few altcoins are starting to show independent trends as they attract new liquidity.